We're going to go through the budget process. First of all, I want to give you a little bit of background information and go through a short definition. Many of you, when we come into the counties, you ask, what exactly is the maximum levy? The maximum levy is the amount of property tax that a unit can raise for a budget year. Some of you will hear us talk about a pie. The pie is the maximum levy as a whole. Within that pie, it's cut down into pieces. Those pieces represent the funds that fall within that max levy. Examples: general, park, health, reassessment, and there are others. But there are also funds that do not fall within that pie. They have their pie all their own. That would be things like debt service and cumulative capital development. Excuse me. The budget process has several steps. Within those steps, sorry, not used to this. Within those steps, you will first of all prepare your budget, advertise your budget. Council will hold their public hearing along with their county council reviews, the adoption meeting. Then, as auditors or the appointed person, will submit your forms to us through Gateway. Then we will work your budget and hopefully certify a budget order by February 15th. What you need to bring to the budget workshops each summer is the financial worksheet, financial report for the first 6 months expenditures representing the expenditures for any given fund. It's broken down by fund. We don't want all of your funds in one number. A list of encumbrances by fund, any investments that you have by fund, and a completed and totaled Form 1. You will have a Form 1 for each fund. When I say completed and totaled, example, general fund has several departments that fall within that fund. We don't want the individual department totals. We want the general fund as a whole. A completed Form 2. This form is for your revenues. It represents a 18-month picture of the revenues that the county will collect. This does not include the property tax. You will also bring a confirmed dates for your public hearing and your adoption along with the times, and also any suggestive publication dates. Any questions? That's relatively quick. We're going to go on over the review, the individual forms as a whole, some in detail, some just very quickly. The Form 1 are your budget estimates, or what we call the wish list. It is broken down into 6 categories. I believe your papers may say 4. That changed this year. Those categories are personal services, supplies, other services and charges, capital outlay, township assistance, which only applies to townships. You don't have to worry about that one, and debt service if you have debt. Form 1 represents the appropriation in detail, broken down into, into your accounts, and then totaled up into each category. Then you have your Form 2. This is your revenues you collect for the 18-month period. Each fund will have its own individual Form 2. And if you printed out the Form 2, you will see 2 columns. The first column represents the last 6 months of the current year, July 1st through December 31st of this year. Column B represents the ensuing year or budget year from January 1st to December 31st. Then you have your Form 3. This is the form that you take to the newspaper for your advertising. The requirements for your Form 3, it has to be, the first publication has to appear at least 10 days before the public hearing. The second publication has to be at least 7 days from the first publication and 3 days from the public hearing. There must be 10 days between the public hearing and the adoption date. On the Form 3, you will have the list of dates for both your public hearing and your adoption. You do not advertise those separate. It's all in one ad. On the Form 3, you will also list the funds, the budget estimate, the levies, and if you're doing an excess levy appeal, along with the current levy. Deadlines for your Form 3. The first publication cannot appear in the newspaper any later than September 13th. That date changed last year. Second publication cannot be any later than September 20th. For your public hearing, the last possible date to hold your public hearing is October 21st, and your adoption hearing, November 1st. On the Form 4, this is your, whoops, thank you. The Form 4 is the form that council will sign at your adoption hearing. It's not signed at the public hearing. The Form 4 will have the total of your line ones, your tax levies and tax rates. Those would be lines 16 and 17 on the Form 4B that we'll talk about shortly. It's you'll see a total of line ones, a total of the tax rate, total of the levies. They're not listed individually on this form. The date of the adoption meeting on this form must be the same date that you put in the paper to notify the public of when this meeting would be held. Form 4A. On Form 4A, there are two columns. The first column is the published amounts that come from Form 1. Form 4A is a concise report broken down. Instead of having the detailed information on the Form 1, it is broken down by totals of each category, the 6 that I mentioned earlier. You will have a Form 4A for each fund. If it's departmentalized within Gateway, you will use the little drop-down box and choose your department, put the information in, and it will total it up at the bottom for that fund. Column 2 is the adoption column. This should match the adoption column in Form 1. You will not change the Form 4A to a figure that you want it to read if you made a mistake in your advertising. Column A must match your Form 1, column A, the published amount. Column B must match the adopted amount, still on Form 1. Form 4B, this is also known as the 16-line statement. This is the dreaded form that many of you just throw your hands up and say, I don't know. On the Form 4B, the fund appropriations are gathered on line 1. It's the total of the budget estimates from Form, is it pulled from Form 4A now? Okay. Line 1 comes from Form 4A, which comes from Form 1. That's changed a little bit in Gateway. It also shows the 18-month financial statement of the county, your expenditures and your revenues, and the proposed property tax rates. All right, from here I'm just going to talk because this isn't in exactly the order that I usually talk to my counties in. So on line 1 of the Form 4B, you'll have your budget estimate or your wish list. Line 2 is the remaining appropriations that you have for the current year, for the last 6 months. If you look at your papers, it is slide 23. There. Okay. We do what we call, and you'll see in Gateway, a current year financial report or worksheet. The line 2 comes from that worksheet. We will ask you what you have spent for the first 6 months. We will ask you about any encumbrances that you have, any additionals that you've done the first 6 months. That gives you your expenditures for the remaining 6 months of what you could spend. The next information, we will ask you if you plan on doing any additionals for the remaining 6 months. This is to estimate anything that you may need to spend that you didn't appropriate initially. And also your cash balances along with any investments. This carries forward your first 6 months expenditures. Hold on. Okay. I'm not explaining this the way I want to, I'm sorry. The first 6 months expenditures you have expended, we take the appropriations that we approved for the certified levy, take out your first 6 months expenditures that you've already spent, add back in any additionals that you did the first 6 months, any unappropriated expenditures. That gives you the amount that you're able to spend for the year. With that, you take out the first 6 months, and that gives you your remaining balance of what you could spend for the remaining 6 months. That goes on your line 2. Your line 3 is any additionals that you are estimating to do, which will also pull from your, does it pull from your financial worksheet? Which also pulls from your financial worksheet. Your line 4A is your outstanding temporary loans that will be paid back by December 31st. Line 4B is your outstanding temporary loans that will not be paid back by December 31st, but will be paid back by June 30th of the ensuing year. This has to be approved by State Board of Accounts and DLGF. Excuse me. Line 5 of the Form 4B is the total of line 1 through line 4B. This represents the first 6 months expenditures. Line 6 is your actual cash balance of each fund, including cash and investments. This is taken from your ledger or your investment records. If you don't keep your investment records in your office, the treasurer would have that for you. Line 7 is your property tax that you will receive for December settlement. We derive at that figure by taking what we certified for your levy and subtracting out, you want to do that? Subtracting out the what you received in your June settlement. You don't want to estimate that figure. I mean, that's a hard figure that we will use when we're working your budget. Line 8A on your Form 2, your column A, flows into your line 8A on your Form 4B. It doesn't change. You just take it from your Form 2. Your line 8B is the same. It's column B coming from Form 2, column B. Be conservative with your revenues. You don't want to overestimate any of them. If you do, you're representing a financial picture that doesn't exist, and we could possibly approve a budget that is not fundable. Line 9 is just the total of lines 6 through 8B. It represents the revenues and cash on hand for the 18-month period. This does not include property taxes. Line 10 is line 5 minus line 9. Shows the property taxes that you need for the ensuing budget year. This can be a negative. That is a good thing. It means you have a surplus. Line 11 is the amount needed to maintain your cash flow. Property tax dollars needed to operate for the 6 months less the miscellaneous revenue. This can never be a negative. If it's a negative, we will be cutting your budget, or you would be doing a current year resolution to reduce the current year's budget. Line 12 is lines 12 through 17 apply to funds with property taxes only. You add line 10 and line 11 to get line 12. Line 13A applies to the counties that have adopted the CAGIT, the replacement credit, to reduce the property tax levy. The amount for 2014 will be forthcoming from our office. Line 13B only applies to those with LOIT. Also, a property tax credit required for levy reduction. Again, these figures will be coming from our office. Line 14 is the result of line 12 minus 13. Look at it, compare it to the max levy. In COIT and non-adopting counties, line 14 will be the same as line 12 because there isn't any replacement credit to offset that. Line 15 is levy excess, the dreaded levy excess. It's property tax dollars that were collected in advance over the 100% certified amount. The taxpayers will get credit for that in the ensuing year. Line 16 is the amount of property tax needed, same as line 14. This must be advertised on your Form 3. If it's not advertised on your Form 3, we cannot give it to you. You did not notify the taxpayers that you were wanting to collect it. Line 17 is the tax rate. Tax rate of each $100 of assessed value. How we come up with that figure is we take the net AV divided by 100, then we take line 16 and divide it by that figure that we, the figure that we just got. That is the property tax amount levied. We're going to touch a little on county council review. I know that it's something that not all counties understand because of the rules that are set in place. County council is required to review and issue a recommendation to all civil units on their budgets, tax rates, and levies, with the exception of schools. Schools, they do a cursory review, but they do not give them a recommendation. Solid waste districts, conservancy districts, Airport authorities, fire districts, and school districts that have appointed boards must have budgets adopted by county council. If a library unit is a non-elected board and the budget increases over the growth quotient, the county council is required to act on the budget, rates, and levies and becomes the adopting body. If the library has a non-elected board and the budget does not increase over the growth quotient, county council will issue a non-binding review. If a taxing unit has an elected board, county council will issue a non-binding recommendation concerning the budgets, rates, and levies. These are towns, cities, townships. If the taxing unit fails to submit a budget for council review, then the unit is held to the previous year's budgets and tax levies. If they don't submit something to you, county council must issue a recommendation. If county council fails to issue the recommendation, the county is held to the previous year's budgets and levies. It can be devastating to your budget if that occurs. I know I got a little confusing through some of those slides, so any questions are more than welcome.